Okay, so basically what this means is relative strength is stocks that are outperforming the market, and relative weakness are stocks that are underperforming the market. Now, how can we use this in our trading? So pretty much for me, I base everything off of the S&P 500. Like if we're in supply on the S&P 500, I'm only going to be looking for shorts on other tickers, and then vice versa. If we are in demand, I'm only going to be looking long for other tickers. So the only time it makes sense to play another stock, in my opinion, is besides the S&P 500, is if you think there's going to be a better move than the S&P 500 is going to give you. So, for example, like if there's news that comes out, so like the news that came out about the banks, it would have been a better idea to short the banks than it would the S&P 500 because the banks are probably going to get hit harder in terms of how much they decline. Uh, when there's earnings coming up, you can't necessarily play the run into earnings by playing the S&P 500 because the S&P 500 doesn't have earnings, but you could play the overall market run into earnings, but I don't do that. So those are some cases where you wouldn't be using this method and it doesn't really work for it. But so what does work for this? If you're strictly trading off of technicals, then you can be doing this. If it's just comes to spies in a supply and you see that Amazon's weaker and has a setup, then you can get into the trade. So there's a few things that you want to make sure. So some of the things that you want to make sure when you're doing this is um, if you are down and if the stock is down, so let's take an example. So like S&P 500 is in supply, and then we see Amazon. So let me draw this out to make your life easier. Okay. So we're talking about Amazon, we're talking about SPY. If I'm struggling a little bit, I just woke up from a nap, so I'm regaining everything. Regaining focus here. But okay, so we're looking at SPY, we're looking at Amazon. So SPY is in supply, up 1%. Okay. And no. Okay, so here's the first example. So at what we're looking at. Okay, so this would be the ideal scenario in terms of trying to take a trade using this idea. I find it works a lot better if you just stick with stocks that are heavily weighted in the S&P 500, like Amazon, Microsoft, Apple, things, stocks like those. If you're trying to trade more of tech and think, or more like, let's say you're bearish on QQQ and you want to go short something that has relative weakness to QQQ and tech, I would just go look at technology stocks and just look at the top 10 holdings and go from there. Same thing with this. I'm looking at the top 10 holdings and making a judgment based on that. If it's not one of the top 10 holdings, that means it's not as significant. So it's a little less likely that it's going to move in the direction you're thinking, but it still can. But in terms of correlation, I like to have higher correlated things to add to my confluence of trades. So, for example, when we're looking at this, a really good way to do this would, or I saw that came up this week, if we go look at Amazon and let's see. If we go look at Amazon, you can see we hit the supply zone here. So an easy example that you can look at is, so when we came up to the supply zone, we go look at MES, and we came up to the supply zone as well. You could see that the move down that we had for uh, Amazon was a lot better in terms of stock price in comparison to the S&P 500. So when we put these two things together, you can look and basically when you're trying to take this trade, you want to see, for example, we saw Amazon hitting resistance and refusing to make a higher high, like close over that higher high. And then you can see on MES, we are in a supply zone. You can look for shorts on either one. But the main thing you want to be looking at, like if you're looking at your watch list, you want to see that Amazon is down 1% or down 2%. You want to see that it is weak in comparison to the market. Like right now, the futures are up 0.5%. You would want to see Amazon in the negative. And so when you're picking your trades, otherwise, you need to have all these elements to come together. So, like, if SPY is not in supply, then there's no reason to be looking for shorts. Or if SPY is not at resistance, you shouldn't be looking for shorts. And any other ticker. So, like right now, for example, when we were down in this demand zone, there was no reason you should have been looking at puts for other stocks, because sometimes you're going to see opportunities where I think we saw this the other day. I don't know where it was, but someone was asking me about going long or going long a stock because it was in demand, and SPY was at resistance. But no, you want to have SPY resistant or at support and that stock at support to get the best trade, the best move, the best opportunity, and the best chances of it likely working out. You want SPY to look just as good as the stock you are trading. If it's not, then the trade's probably not going to be that good. And I think a lot of the times what people end up doing in their trading is they will say, oh, the S&P 500 SPY, futures, blah, blah, blah. It doesn't even have a setup. I'm not going to trade SPY. Oh, but go look at this ticker over here. Go look at Apple. Apple's at resistance right now, and hasn't started selling off yet. And so then they get bored, and then they start creating trade ideas on these other tickers, and then just go find out they're buying when they're sitting not paying attention to the S&P 500. They're looking at these other tickers and they see Tesla is at support, not paying attention to SPY, which is at resistance. They end up getting in Tesla calls. SPY pulls back when it hits resistance, and then your Tesla calls get stopped out and you're wondering why. It's so, like, a good rule of thumb that will save you from a lot of trades is if you just stay focused on the overall market, the S&P 500, and then once it is at resistance or once it's at demand or support, that's when you go look for your other trades. That's when you start hunting, right? You look for a stock that is in demand and looking strong. So perfect example here. So like anytime SPY would be looking bullish, number one name I would have gone to this week, Meta. It has been continuing to run every single time it's reached, like every time it pulls back, it gets bought back up and keeps continuing higher. So how can we look for entries in terms of watching this? So a lot of times what I'll do is, to make it easier on myself, I'll have this list up right here, and this is what I'll trade. Crude oil typically does its own thing. I'm watching the overall market, and then I'm watching Apple, which is a heavy weighted stock. I don't watch Microsoft because I don't like to trade Microsoft, so I don't watch it. And then I watch Amazon, Meta, Google. They're all pretty big holdings in the S&P 500, and that's what I just stay watching. So now, like when you're looking to take entries on this, we're just looking for demand zones that we can find an entry on. So like, for example, here's a demand zone. And then what we would be doing is we'd be taking entry when SPY. A good way to show this would be is if I go like this, we go here, and we sync up crosshair, right? Is that right? Yeah, okay. So, let me zoom out. Okay, maybe this isn't going to work the way I thought it was. Okay, never mind. That doesn't work. Okay, so what you'd be doing is you'd see that Amazon or Meta gapped up. It's been running. You can see it's been running for a long time. So this has pretty much been a straight up trade. So like all you'd be doing is you'd be looking for entries for pullbacks to take your entry at demand zones somewhere here. You would just keep looking for places of strong imbalanced moves. Look for the pullbacks to these areas and take your entry. And so that's the easiest way to play it. Wait for you say, okay, so when the market looks like it's gonna, I want to go short on it, I'm going to be looking at something in a strong downtrend. Like what's something in a good strong downtrend? This is in a pretty good strong downtrend. So like you'd be, so how I'd go about this is we're looking through, I have a short list that I look at. So you can see certain tickers are down. Meta was outperforming, right? Tesla is underperforming, AMD underperforming. So as you can see, we had a huge run. We're at resistance for AMD. And then what we'd be doing is when we are starting to look to go short MES, we would look for relative weakness in semiconductors. But right now, obviously, they're very strong. So this would be a prime example of when MES is at support and it has this move that looks like a bear flag, rather than looking at AMD, it was more of a bull flag breakout. The difference between getting in. So kind of the key elements that you want to have in terms of picking this stuff out is one, you want to have SPY matching up with your trade. So like if you're looking to go long, you want both the ticker you're looking at and SPY to be in demand. Two, you're going to want SPY or this ticker to have relative strength in comparison to SPY. So this ticker is up 1% or 2% and SPY is flat, for example. Or SPY is down 1%, this ticker's up 1%. So you take entry on the ticker that's up 1%. And you take these relative strength, you have to have those key elements of, so we can put it out all in writing right here. Okay. So that's number one. So that's the first thing we got to look for. Number two, okay, so that's another reason. And then so when is a time that we can take a trade that has nothing to do with SPY technically is when it's a news driven event. So like when those banks, the information came out and the banks dumped, obviously you could have played that solely on the basis of the news of the banks and you would have got in based on technical analysis. So like we went and looked at the banks. So those are the two elements that we're looking for when it comes to this. So really, we need to have a setup in SPY. We need to have a setup on your stock, and then we need to have either relative strength or weakness to support your idea of long or short bias. So, is there any questions when it comes to that in terms of trying to match up, picking a trade idea? So, like, but I do need to clear this up. So, like, if SPY is at supply, and let's say Amazon is weak, and you just take Amazon because it's weak. You can't do that. It needs to be at supply. It needs to be at resistance. It has to have a setup. You can't just blindly hop into it in the middle of nowhere. It needs to be either At resistance, if you're looking for puts, it needs to be at support if you're looking for longs. Or breaking support or breaking resistance, vice versa. So each element has to have a setup. So we can make that its own thing. Okay, so those are the three elements that we're going to be looking for. If we go look at the banks, we can see a good example of how news-driven stuff you don't technically need relative weakness or strength in comparison to the market. So that news came out on a Sunday. Here's that Monday morning when the news came out, and then after the dump after. So you could have seen supply, caught a rejection on the lower time frames. Here's our supply. Right there. How I got that. You can see an imbalance move down. Our correction to correct that imbalance move, which is plotted from the candle before the mass breakdown. And a lot of times the correlation or some I've found in my own trading, when you plot this candle that has a strong, like a gap down or gap up, a strong move after, a lot of times it's going to act as support and a continuation place to enter the trade for it to continue in the direction that you're looking for. So in this case, we gapped down, it came back down, retested this candle, and then broke down. I see that happen all the time. Meta, you can see it happening over and over again. You can see this gap that was created here. And then you can see next day we had a big gap up. Might have been a couple days later, we came down and retested that gap up candle. We still have an opportunity to retest this one here. Let's see. There's another one. Okay, so you can see this one here. We had a gap up candle and we retested as soon as the market opened. So it's a similar idea that I taught you guys about gap levels, but plotting that entire candle can help you have a better support bounce on a trade that's already continuing in the direction you're looking for. And then vice versa, you have a gap down, you're looking for a continuation in the same direction as that gap down. And you can find entries all over the place. So like, here's another example right here. Gap down, came back, tested resistance here, and boom, we had a breakdown. See if I can find another one. Here you go. Gap down, came up, retested some resistance, broke back down. Okay, here's another example. At resistance, hit the gap level, break back down. Where's a bullish example that I could show you? This is one of my favorite setups that I like to trade. Go to the daily time frame. I don't know where that stock is, but that's a good kind of like helpful tip for you guys to use. So in terms of just going back over and refresh on this here. Are we good with these topics here when it comes to understanding relative strength and weakness, when to buy in, when it actually works, the key elements that we need to have, including this? Do you guys have questions in terms of these things here? Or are we good? It's pretty simple. If you want to unmute, if you have questions that you want to ask, it doesn't have to be related to this topic. If you have questions you want to ask in terms of like supply and demand, that topic I just taught you, or that tip I just taught you about the gap up or gap down strategy, taking that previous candle before. Do you guys have any questions in terms of what it comes to and those things? Or really anything? Do you have questions on anything? Anything in the Discord? Anything? Or are you guys ready for the markets this week? Good. This topic is pretty simple. There's not too much to cover in terms of this stuff. But okay. Well, if we're good to go, then we can get out of here. Just confirm you guys got no questions. You're good, especially about this gap part strategy. I know that's not about the topic of what we're watching or what we're discussing today, but it's a very helpful tip in terms of really good trade opportunities. Okay, cool. All right. Thank you guys for coming. I will be seeing you for the markets tomorrow. Maybe we'll find an opportunity tonight. Maybe something will set up. But okay. All right. Thank you guys for coming. Have a good night and have a good night's rest. I'll see you for the markets tomorrow.